Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 6 o'clock in New York. It is Wednesday, 12th day of January 2020, and this is the Daily Report for Gold and Silver. The fears about the continuing spreading of the coronavirus have diminished somewhat, and that led to an incredible rally in U.S. equities markets today, taking all three major indexes, the Dow, the NASDAQ, and the Standard & Poor's, to all-time record highs. At the same time, we had Chairman Powell speaking for the second day, as he does twice a year, and he used a word that we haven't heard in quite some time, and that was that he is prepared to initiate rounds of quantitative easing if needed to stave off a recession. What interests me about that statement is they have been slowly accumulating their assets to the tune of about $60 billion per year. And so it kind of sets up that precursor for why he would need to build that war chest, so to speak. Lastly, we had the U.S. Treasury Department announce January's budget deficit coming in at over $30 billion. That is a huge increase over the year before. Let's take a look at current pricing and then our technical studies. And I do want to take a close look at Palladium today following an interesting report by Johnson Matthey. In terms of the precious metals, very little action in gold futures today, closing down $1 at 1569.10. Not much of a move at all. We had platinum move down almost a full percentage point, 0.9%, down $8.70 at 964.80. We had silver lose about 0.8%, 1745. That is a 14-cent drop. But palladium, that lone star, continues to rise, gaining almost $60 at 23.25.20. There was an interesting report by Johnson Matthey that we talk about in our opening letter, and it's something that is absolutely worth discussing during today's show. Let's take a look at our charts. Traders, as you can see, we continue to see gold trade below a critical level of resistance. That resistance is the former support trend line. I've just put it in green, and it was simply created by attaching a series of higher lows as this market moved up. When we broke solidly to the downside. It did find support at the 38% Fibonacci retracement level, approximately 1550, moved back up, but as you can see right here, came shy of being able to close above that particular line. We are also at the end of a very minor count. This is a 480-minute chart that shows that we are still in our fifth. We could see that move up a little bit higher, but my sense is that once that is completed, we will get some sort of an ABC correction. Based upon that, my recommendation is to maintain our current neutral stance with no active trades. And by the way, the afternoon session has just moved into action, 1569.30, putting it down $2.30. Let's take a look at palladium. Traders, the fact of the matter is that palladium has been on an utter tear. There is much more demand than there is supply. And one of the largest world's refiners, Johnson Matthey, came out and said that there was a huge deficit in 2019, and they expect that deficit to actually grow in terms of what is produced and what is needed in 2020. That kind of fundamental information means that we could see palladium continue to rise. Now, I have shied away from palladium for one simple reason. Whenever I saw palladium move up parabolically, I saw it crash hard. That is not the case in the most recent action. Again, up $60 today. Now, what we're looking at is a short-term 480-minute chart of palladium with a minor Elliott wave count. This is our last corrective wave, our wave 2 that came in right here. And what I'm doing is I'm looking at the ratio between wave 2 and wave 3. In other words, the length of this third wave. I am then doing a Fibonacci extension starting after the correction in other words, wave 4. And if we look at the 0.618% extension, and that is currently an accepted methodology to forecast the top of the market, that takes us to about 26.28. Now realize that is A, on a short-term chart, and B, it also agrees with the automated system, which is the Elliott wave count. That's coming in precisely at the same place. And traders, the primary reason that I am reevaluating Palladium trade is this recent report by Johnson Matthey, which is citing that there was a deficit last year, and that deficit is likely to deepen in 2020 as an increasing number of Chinese and European vehicles meet China 6 and European 6D legislation. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.